Okay. Can you just let me know in the chat box if everything is fine, please? If you're watching this on YouTube. All fine, all good. Okay, guys, so how are you? I'm pretty tired. My wife had 40 years this weekend, so it was, a lot of what's going on. We had a lot of visits and so on. So, but still, we are obviously here. Markets are open, so I'm sure that we will have another interesting price action, like it's been the case for the last few months, with interesting volatility. And you know that volatility is needed for potential money making in the profits, because you always want to have markets that moves right. Generally speaking, as you know, last week we have firstly strong US, not strong, but USdCPI data came out better than expected at 5%. So we have seen some US dollar weakness at the start of the last week, but then some of the losses got erased at the end of the week on Friday, after Fed officials said that there is room for or need for another interest rate hike. And obviously, as a response to that, we have seen a dollar recovery, and at the same time, we have seen US notes coming to the downside. More importantly, gold also sold off. So it looks like that we are now in some kind of a period where we could see more potential dollar recovery, especially if maybe now we will again, or the markets will again try to focus on some other central banks and inflation data. As you know, I mean, the ECB is also looking for more rates hike, potentially even 50 basis points. But earlier today, we just heard comments that the ECB has the options of a 25 basis points or the 50. So now it will be important to see if maybe 25 basis point will repeat more often than 50. Then, as you know, if firstly the euro has been rallying on a 50 basis point, and now suddenly the bet will be increased for 25 basis point, then maybe the euro dollar could see some of the pullback. But before we go to the euro dollar, I want to bring attention to the dollar index here. Notice that I'm still potentially tracking this wave 2 or wave B corrective recovery. I know that we have moved to a new low here, and I was actually tracking a drop as a corrective one towards the new low, and then I said that I would be looking carefully about the potential breakdown, because clearly we still have the SP500 trading around the resistance. I see VIX, that I will show you also a little bit later, is that maybe the VIX shows that there is not a lot of fear. We are seeing calls moving into some extremes, so it looks like that market is confident about the potential further rise on equities. And normally, when that's something expected from the crowd, we should be aware that maybe something else is could potentially happen. So if VIX really would potentially see turn to the upside, and there would be some kind of a fear that would try to again come back, then obviously on the other hand, we know that this could potentially cause more short-term weakness on the stocks, and especially if the US dollar could rally during this period, then we know that this risk of loss could really start to kicking in. So I'm very careful here with dollar weakness. I'm just realizing that potentially we could see a recovery. Also, it's important to know that whenever you see sharp reversals like we have seen on Friday, meaning at the end of the week, it means that potentially bulls are now trying to take over. Okay, so if, let's say, during the day on Friday you have seen dollar weakness, but then this dollar weakness is completely erased by bullish price action, then bullish price action is the one that matters at the end of the day, because closing price is the most important price of the day. Also, if you look at the candlestick formation here, you have potential bullish reversal building on. So what is the bullish reversal? Well, notice that was the green candle on Friday. Okay, so here was an open. And then you had seen, here was the open. Okay, around 164. Then we have seen a push to a new low, meaning below the previous red candle, and then the most important was that price closed above the previous candle, and this is called the bullish reversal, which typically can put correction in play. Okay, and it has not been the case only now, it's been the case here, the bearish reversal that unfolded back at the start of the year in January on Friday. Then also we have seen here on Thursday, December 15, the bullish reversal, and later on we have seen a corrective recovery, and even here was the bearish reversal going back to November of 2022. So we have this type of patterns that for me are very, very important, especially this matters here with this failure breakdown. Okay, because I know that there's still a downtrend, but if you see the previous swing low broken and then suddenly reversed, then obviously that's not the real breakdown yet. It could potentially be the opposite signal. So I know that there were also most likely a lot of stops cleared down there, so I would not be surprised if maybe we are going to see more upside here. However, because of different potential interpretations, as you know, markets are not always clear to apply only one wave count. I'm tracking 2 wave counts. But both are quite interesting. Now, the first one here on the dollar index is, as I said, could be the wave B, and this could be the 7 swing drop with the overlapping price structure here, especially in this second part, and that took us back to these lows, and now we are reversing. So if this count is correct, then obviously the upper trend line will be broken, which will put 5 wave movement in play for a wave C. Okay, that's a little bit aggressive call, I know, but still it's something that I'm tracking here on the larger scale. Now, another interpretation, the second wave count, is that maybe this drop after all to new low has been in 5 waves with some kind of tricky flat correction here still for a wave 4, and that was a wave 5. But even this aggressive bearish count, because I have an impulse, suggests that we should rally in 3 waves, right? Because in Elliott wave terminology, always when you are tracking even just temporary pullbacks and you know that higher degree downtrend will stay in play, you still should see a minimum 3 wave recovery. And so far, that's not the case yet. So I have two different counts here, and both suggest that potentially we could rally here. So with that being said, I'm really curious to see how stocks will trade this week, and if we suddenly see, as I said earlier, maybe some weakness, then I think that this dollar rally could even extend further. Okay, so for now, short term, of course, we should just always try to focus on minimum expectations, which is an ABC recovery. Now, if we take a look and just keep in mind what I said for dollar index. Now, if you keep an eye on euro dollar, then you know that last week when we had this free webinar, we said that we are tracking here wave B correction with an ongoing recovery. We said that we are looking back towards these January highs, it was February highs, which has been retested, and now we are going back to the downside. So watch out this trend line support connected from these March levels. Again, could be broken, potentially could see more weakness here. I would not be surprised, because if you look closely here, hey Nishat, if we look closely here on this intraday structure, you can clearly count this as a potential bearish impulse. Maybe based on the latest development, this was actually an update earlier, were also shared on Twitter. But if I update this a little bit, maybe this could be some kind of I'm not sure if that was a high. Yeah, it was a new high, or still could be wave 4 here, and now you're in wave 5, because we haven't seen any real correction yet. I'm still thinking that there's room for more weakness. Also, I'm looking at 109.25 level. Why this US? Because here we had back in Wednesday, April 12, we have a very nice bounce and the breakout later on. And notice that that was actually the US CPI release. If I click here, you can clearly see the US CPI release actual figure was 5%. So normally, why this is important to ask? Because this, we know that everything what Fed is looking for is about inflation. So everyone wants to see what are the inflation figures, because on that number, there will be speculations what Fed may do next. Will they be looking for more rate hikes, cuts, or whatever? So obviously around this time, when the report comes out, you will see a strong movement. So a lot of orders, executions could happen based on this data. And that's why in this data here, back on Wednesday, this price was very important, around 109.25. So we have seen a very nice push to the upside from there. But since we are now reversing and failing at that February highs, I think that we could potentially see even weakness back to 109.20. Okay, just a second. Give me a second, please. Okay, so I think that there can be more weakness coming here, as I said, towards 109.25, potentially even lower after the next bounce. Also, the important is for me at this stage that when we broke this 109.73, not only this February high couldn't hold bulls alive here for a longer period, we are also coming back towards this 109.73, which so far doesn't seem that it will hold as a support. Okay, so I'm looking for this potential scenario. I have a question here. Isn't the wave E for triangle too short? Yes, I mean, based on this data that we have within this triangle, yes, it's a little bit short, but keep in mind that not all of the wave structures are perfect or textbook. We obviously did not expect at that time when we were tracking this triangle, didn't expect such a small wave E. But unfortunately, when the market moved to new high, we haven't really didn't see any very good other value chance actually. So that's why we forced a little bit this wave count, but still I think you get the message here that the important is that this was the wave B with an ongoing recovery, and that potentially we are now in a reversal mode. Of course, I could label this, since you asked, I could label this also maybe slightly different. Maybe we are going to see more upside here with another push to higher, and wave B has ended here, and you are now in some kind of wedge pattern or ending diagonal if you want. Okay, but even if we see a break to a new high, suddenly I would be looking for potential limited upside. That's why I'm having here an alternate scenario, ending diagonal. But the whole story here for now to me is, as I said, we got a reversal on Friday. I still see VIX at the support, meaning SP500 can be at the resistance. We potentially have the ECB or speculations that there will be 25 basis points rather than 50 basis point increase on next meeting. And all of these combinations, everything suggests, at least for me, that we could potentially see further weakness. Also, the most important, obviously, for the start of the week is this 5-wave drop as well. And if you look at commodity currencies, if you look at even on metals, you can see the same similar pattern. So I would not be surprised if markets are stepping into the pullback mode. Also, here we have this euro currency index. I think it's equally weighted. This one is a little bit different, has a little bit different labeling, but still notice this wedge. Notice that we are a new high. Of course, this wedge could stretch a little bit further, but overall, I think that we are in the late stages of this euro recovery. So again, another potential indication why we should be aware rather than surprised about the potential turn here. Okay. Now let's take a look on cable. Now cable, we talked about this one last week. So we said that we are seeing prices in a wave 5 already trading at the new high. So becoming a very bullish here would be a little bit too late for our taste. I mean, keep in mind that we are in a wave 5 after all, potentially already topping out. Of course, fib levels, the technical ones, are at 1 to 7 and all the way up to 1.3 level. But keep in mind that again on the intraday chart here, from the high we have 5 waves down. Okay, so these 5 waves down, for me, it's, at least for now, it's the most important indication why we could potentially see more weakness. If suddenly, let's say, we rally back to 125.40 or 125 in very strong impulsive manner, then maybe this I would readjust and level to be as a potential flat correction, the whole structure here from April 04. But because of what I see on the euro, on commodity currencies, on metals and others, I just think that there is a greater chance that this market will actually resume even lower after ABC rally. Okay. Here on the 4-hour chart, what could be happening is maybe if we really are going to see this important top here, then maybe the best idea to label this one is with an expanding diagonal. Of course, this one are not can be very challenging, very tricky to track. I really honestly do not label them a lot, but if we just respect everything with what I see so far, and also that we have some kind of overlapping recovery here all the way up from these March levels, then certainly this one is on my primary list for regarding the bearish potential scenario from here. So looking at the levels here, 23.43, also if this one is broken, potential support in the near term should cause much more weakness here, in my opinion. Now, if we take a look also on Aussie, so I said last week that Aussie and Kiwi are the best one to look for potential shorts in the risk-off scenario. Okay, and as soon as stocks just slow down, we have seen a very strong drop on both Aussie and Kiwi. Unfortunately, Aussie here tricked me a little bit. It has reached a new high, while Kiwi did not. If I open Kiwi here, so I have been actually shorting Aussie, but then cut it later on. And here you can see this scenario. So Aussie actually has made the lower high, while Kiwi made the lower high, while the Aussie has reached a new high. But both of them are now moving back to the downside. So actually, what was my mistake is that I've been looking and shorted Aussie instead of Kiwi. I should pick Kiwi. Why? Because it was weaker than Aussie when I was doing that, as you know, intermarket analysis. But somehow I thought that both of them will move to the downside, but unfortunately Aussie stretched a little bit higher. However, I still think that there is a chance for more weakness based on all of the latest development. I still see this as a corrective recovery. I mean, if I try to label this as a potential bottom, then again, I will have a lot of issues here. So the easiest way to label this is in a corrective rally here that finished at this wave C qualitative target at 6,800. And so far we can see a very strong reversal. So if you look here on a smaller time frame, you can clearly see that there can be counted 5 waves up into the new high for a wave C, and now you're seeing a very strong reversal. So maybe now some consolidation period here can be coming, but eventually I think that this correction will be broken and that this week we could retest these April lows still. Okay. Now, if we also take a look on what I have, dollar yen. Now, dollar yen is coming to the upside, as I said last week. New Bank of Japan governor so far will stick to the current policy. So that's one thing why Japanese yen is not strengthening, because if, as you know, recent gains of Japanese yen that we have seen was either driven by the lower US yields, or maybe on a speculation that Bank of Japan will sooner or later remove this yield curve control. However, that's not the case yet. In fact, we are seeing yields coming to the upside, and also this yield curve control looks like from Bank of Japan will still remain in place. So that's why dollar yen is coming to the upside. But still, I mean, we have a very nice resistance here around 135. And this resistance, if we suddenly see a sell-off from there in impulsive fashion, let's say at the end of the day we see a closing price around 132 or even lower, then I would most likely looking for potential shorts here. Okay, but I will not be looking for shorts right into this area, which maybe some traders with aggressive approach could still do it, but then stops should be at a new high. However, why I will not look for potential shorts right into this level is simply because I think the dollar, as I said earlier, has potentially more strength going on. So I become a little bit nervous if in this environment I want to be shorting. I want to short the US dollar. And the next thing, what that is very important in my opinion, is also Nikkei. Okay, let me. Okay, so here below the bottom I have Nikkei. Here at the top we have dollar yen. Notice that somehow correlation here into the end of through 2022 actually was not really there. Okay, but then when the US dollar has turned to the downside, when we have seen yields coming down, then dollar yen started to drop. And you can see that later on here at the end of 2022, okay, at the end of 2022, then Nikkei, okay, and dollar yen somehow found similar correlations. Okay, and then we can see here that at the start of January, this one or both has bottomed. Then again here on January 09, both found the top. Okay, and then here we can see similar bottoms as well. And now what is important, notice what Nikkei is trying to do here. We are seeing potential breakout here. I'm not saying that we really are breaking higher, but if this one would suddenly extend its gains, that's why I'm saying that 135 may actually not hold. If this Nikkei would really see more strength, and if stocks suddenly will rally all the way globally, then of course this dollar yen could easily be pulled through 135 resistance. That's why I said earlier that even if I still have this very nice bearish wave count, is that I want to see that this level that I identified as a potential resistance will actually hold as a resistance. I want market to confirm that this level really matters. So in other words, if I identify zone, I want to see a response from that zone before I am looking for potential shorts. Because you never know, even if you identify resistance levels could be broken through. And this could certainly be the case if Nikkei, as I showed you earlier, would really extend higher. So that's why I will be a little bit more careful here shorting dollar yen. But overall, I mean, keep in mind that this is the observation for this week, but overall I still believe that dollar yen will be trading much lower later this year, and that this firstly 130 and then even 126 levels will be broken. Okay, we just have to be a little more patient here. Okay, now let me check my list here. Okay, let's take a look on gold. Okay, so on gold, maybe let's start this with gold silver ratio. Okay, so Gold silver ratio, if you're trading metals, if you have any bias, bullish, bearish, I recommend to track this ratio, okay, because it can really help you to identify if we are in a bull run or a bear run on metals, okay, because normally when gold silver ratio is dropping, it usually means that both silver and gold can be in uptrend, but silver obviously will outperform gold, okay. So this is certainly the case here, but notice that we have a little bit overextended move here towards 161.8%. We also have some doji candle here that occurred here. Looking back, this was back on February of this year. Okay, so apparently we are at the potential supports here. And what would you expect after such a nice extended third wave? Well, obviously a wave 4 recovery. So this wave 4 correction could mean that if gold silver ratio will move to the upside, even just temporary, it means that both gold and silver could potentially slow down for a correction as well. And if you look here, then obviously we have bias on gold silver ratio. And if we look now on gold itself, you can clearly see that we can count 5 waves up. We've been tracking this one very closely last week and also identified this as a wedge pattern ending angle in a wave 5. We were also approaching this all-time high. So whenever you have this 5 wave movement with the wedge in a 5th wave and trading close to very important level, the all-time highs, then where everyone expect a massive breakout, well, keep in mind that maybe there will be something else going on. In fact, this bull run ended with a very slow and choppy price action. You can clearly see an overlapping recovery here compared to the previous very strong lag. So this type of a price action suggests that bulls are losing strength here. They are running out of steam. So normally when this ending diagonal is finished, you will see a very sharp reversal. And I would not be surprised if this reversal started here on Friday and that we will see more weakness. Potentially now in textbook stuff, you will see a retracement all the way back to the starting point, which is also a starting point of a wedge pattern, which is obviously here at the ending point of a wave 4. So I still think that there's plenty of room for more weakness. At that time, you also back at that highs, you also had this divergence here as well. So another indication why maybe it was a little bit late for to catch any new longs here on gold. So now when we have only one leg to the downside, as I said earlier, even if that's going to be just another corrective pose and that we will just stay in range, well, you still need 3 subwaves, right? So I think that there is room for more weakness. Okay, so just keep in mind that that's going to be the case. Of course, this actually suggests that dollar could do much better compared to others because everything at the end of the day is linked to the US dollar, obviously. Okay. Also, let's take a look now on crude oil. Okay, so what's going on with crude oil? We've been tracking this one pretty closely recently, and so far been doing well here based on these Elliott wave swings. So again, just to give you a quick recap here, we have 5 waves down. Okay, we are bottoming because we came out of a triangle, and then we are reversing and breaking this trend line resistance. Now, broken trend line resistance normally suggests in a downtrend, obviously suggests that you are in a new corrective phase. Again, based on minimum expectations, you would expect a 3 wave recovery. So it could even see $90, maybe even $100 per barrel still this year. Okay, but keep in mind that there will be pullbacks into this wave B. Now, one very important support level whenever we see a pullback will certainly be this gap. Okay, so whenever gap is open, just be aware that when pullback occurs, the gap could be filled, and this gap could later, after the fill, could become a very nice support. So we either see a fill after this wave 4. Keep in mind that wave 3 is, this whole move is a little bit overextended. We are certainly at some resistance levels here. So if we also break below this previous swing support here around 81, then I think the deeper pullback will kick in, and that's when we should be aware of a potential retracement back to this gap fill. Okay, so the idea is just to observe, patiently wait on these higher degree pullbacks on the gap fill, and then we will try to catch the upside. Okay, for now here price is a little bit too high, but not only one wave count, which suggests that we could be in a wave 4 of wave A. Maybe wave A is already finished here. So I have okay, so here's another wave count, and notice that we have potentially 5 waves up, and you will see this gap fill after the wave B. So you can see actually the slightly different labeling, but similar approach, similar idea. So these current resistance levels will hold. If we see a break below 81, then I think that lower prices to fill the gap could be in the cards. Also, maybe even if I look this, try to, let me delete this a little bit. Maybe even some kind of a head and shoulders formation could also be very possible here. So left shoulder, head, and if we see pullback, that would be the right shoulder to fill the gap. Well, that would be too good to be true. So, but definitely something to keep an eye on. Okay. Now, what we have left, let's take a look on the S&P. So again, firstly, I will start with this VIX. Okay, so VIX here, notice where we are at the extreme of optimism of 2022-2023 range. Okay, and always when we were trading at these levels, what happened? Well, the S&P 500 found resistance. So firstly, it's been the case here. You can see back in February of this year. Then even we have seen a similar reaction in December of 2022. It was a high here in August 2022. Then again in April 2022, exactly a year back. And obviously here in December of 2021. And now we are here. So if we respect what the S&P 500 have done here, of course, I should be aware of potential new slowdown. I'm not saying that we cannot break to the upside. Of course we can. But if I also respect the potential idea of a triangle, meaning if I analyze the sentiment with the patterns, then clearly maybe this no fear means could actually bring back the fear. Earlier today, I just saw that in this first quarter, we have again very big number of new calls on the S&P 500. So I think that these calls obviously tells you that market is confident that there will be further rise on stocks. And you know that if this is moving into some extremes, that again, we could see potentially the opposite reaction. Okay, that's how we read the sentiment with the Elliott wave. So of course I am expecting more upside on stocks generally speaking this year, but I just think that this wave pullback would be very nice before we really start start building up the very strong bullish picture here. Okay, so watch out that we're still at the resistance, and obviously, as I said earlier, this resistance may not be broken that easily if dollar has really found a temporary support. Okay, also, if you look just on a few scenarios here on the S&P 500 4-hour chart, well, we could be trying to complete this free wave rise. By the way, this is the leg within that big triangle. Free wave rise from that March lows. So obviously you are now at the equality fib, equality level, potential resistance. Even if you think that we are in a wave 3, and I delete this, you would still be expecting a pullback, but not that deep, probably just temporary one, back into the wave 4. Okay, so you can see that in both cases, there can be limited upside. Potentially, even a wedge pattern here and the diagonal could be telling us that bulls are running out of strength here. So no matter how I look at it, even if I delete this as well, you can clearly see that 5 waves up from that 3930 to 400 and to 4200. This suggests that maybe we are going to complete this current rise and that higher degree correction is possible. Okay, hope that makes sense. Also, if we, let me just go back a little bit to return my letters. Also, if we look here at Nasdaq, still we are potentially trying to find the top for wave 5 of this leading diagonal. So again, I know it can be 1-2-1-2 very aggressive bullish scenario, but always try to be more realistic and not be that aggressive with any calls. So in this uptrend, we have always seen some very nice retracement. So obviously, I want to see something similar before I may confidently say that we are headed back to the upside. And obviously, this leading diagonal goes very nicely with the SP 500 with the current look. Okay, so maybe potentially here we see 3 waves down, while we see on the S&P 500 that wave E pullback. If suddenly, let's say that I'm wrong and that we break higher, then what I really want to see, okay, to change my labeling a bit here, then I obviously want to see a daily close price above 43.30. I want to see this level broken, okay, this level broken to make sure that the whole correction has ended, and then I would be looking for potential pullback on shorts. So I want to see this level broken. So as long as we are below that level, I certainly think that there is still ongoing corrective price action. Okay. Okay. Greetings from Tanzania. Hey, we have a few questions. Dollar yen, we covered this one. Kiwi, let's take a look at Kiwi. We are 40 minutes already in this webinar. Oh my God. I thought today that I will be here around 20-30 minutes. Anyway, Kiwi, well, we have clearly a bearish trend. The most important is that we had this 5-wave drop at the end of 2022. Then we would been tracking this corrective recovery sharp one very closely, and so far it looks like that maybe downtrend will resume after this current bounce. So far we have a support here around 106. Maybe this can be some flat correction here for wave 2. So we are now approaching some resistance around current levels all the way up to 109. I think it should be also very important. So I think that maybe Aussie Kiwi could potentially see, this pair could potentially see more weakness. But whenever it comes to Aussie and Kiwi, I really think that based on last week price action, I think that we have much clearer situation on both of them. Aussie and Kiwi are looking weak versus the US dollar, okay, for this week, obviously. Okay, now finally today, let's take a look on total market cap. Well, this one, I believe we shared also some of these charts as well. So here, what we have is potentially ongoing bullish impulse. We are now pulling back. The Ethereum is now still very strong. Some of the other altcoins are struggling a bit. Even Bitcoin is not that aggressively bullish, but Ethereum looking good. So when I'm looking at the crypto total market cap, if we are despite this very nice pullback still in a corrective phase, then we know that Ethereum should move much higher. So maybe you're now in a wave 4. If I try to apply the wave count here, sorry, the FIPS. Okay, you can clearly see that we are approaching some support, so that's probably the key level. Of course, if we break below 1.17 trillions here on crypto total market cap, then I think that major correction will start kicking it, and that again cryptos will be on a pause. But so far I think that maybe there is some interesting support. Also looking at the Ethereum here, we have potential ongoing impulse. If I label this as well here, maybe you are now in some kind of a small flat, and you will see more upside for wave 3. So short-term invalidation level clearly is at 1946. So if we overlap this, it would be the first indication that something is changing. But the big level, even more important, definitely is here at 1860. So keep an eye on these two levels. As long as we are above that, the trend is still pointing higher. Okay. Okay, traders, thank you very much for your attention. I hope that you enjoyed this presentation. If you have any more questions, anything, make sure to check all of the links that we have. We will post below this YouTube presentation, and also links below this presentation on TradingView, or just follow us on Twitter for more free updates during the week. Traders, trade well. Bye.